our discussion on unlocking financial freedom. Thinking about that dream of sipping coffee at home or, a cocktail on a beach without constantly hustling for money.
Absolutely. It's all about letting money work for you, right?
Exactly. And there are two big avenues here, dividends and growth investing. When we talk dividends, I'm talking about reliably generating income from companies like ExxonMobil and Johnson and Johnson.
Yeah. So those dividend stocks are the classic way to get that steady cash flow we all chase?
Yep, dividends provide a continuous income stream, as seen with ExxonMobil's Mummer 3.7% yield and J&J's NUM 3.3% yield, both boasting decades of dividend history.
Right. That's pretty appealing if you're after stability.
For sure. But you got to keep in mind the cash you get today might mean missing out on those potential bigger gains tomorrow? It's like when you opt for steady paychecks versus aiming for explosive growth potential.
Yep. So then, how does growth investing come into play here?
Well, growth investing with stocks like Tesla or Nvidia is all about reinvesting profits back into expansion instead of handing out dividends. These are the innovators whose stock, like Tesla's went over 700% in 5 years, can multiply wealth significantly.
Mm-hmm. That's impressive, but aren't growth stocks a bit riskier?
Oh, absolutely. Growth investing carries its own set of uncertainties. The gains aren't guaranteed, and market dips can really impact your returns. It's a trade-off between getting income now through dividends versus aiming for capital gains that potentially could fund
Right.
even more passive income in the future.
Hmm. I do wonder though, if you're chasing higher returns, wouldn't the risk really pay off in the long run instead of locking in, lower dividend yields?
That's a fair point, but here's where I might challenge that idea. While growth stocks offer tantalizing returns, they can also lead to a lot of volatility. You might, for instance, face months where the market's down hard, and that's not what every investor is comfortable with, especially if you're relying on that income for living expenses.
Yeah, I see that. True, not everyone can stomach big swings.
Right, it becomes a question of personal financial goals. If you need cash flow, dividends from ExxonMobil or J&J provide that stability. But if you're in a position to handle risk, growth stocks like Tesla or Nvidia might multiply your wealth, potentially giving you huge returns over time.
And it's interesting how both strategies have their own kind of game plan, huh?
Exactly. Consider this. If you want a monthly dividend income of about $2,500, calculations show you'd need investments nearing $486,000 to $545,000 in those dividend champions.
Yeah, that's a big commitment. Wow, nearly $500,000 just for dividends. Talk about playing the long game.
Sure, it's a long game and it requires deep pockets or a lot of patience to build up the necessary portfolio. On the flip side, if you start with a smaller investment in a high growth stock, say $2,000, and assume a hypothetical 20% annual growth rate, you're looking at it growing to roughly 3,656 in just 3 years.
That sounds like a neat way to potentially dip your toes into investing without a massive initial sum.
Exactly, it's a low stakes entry point. You can even sell part of that growth investment, recoup your initial dollars, and then reinvest the profit into dividend stocks to start building that passive income stream.
Right? Like a step by step approach. But then there's the risk factor. Growth rates aren't set in stone, are they? Markets can be unpredictable.
Yep, exactly. While the hypothetical 20% growth is enticing, market dips or slower growth can really throw a wrench in the works. It's not a free lunch, and you got to be ready for some ups and downs.
Absolutely. So, would you say that the dividend path is more for those who need reliable cash flow right now, whereas growth investing is more for building wealth gradually over time?
Precisely. Dividends provide income stability, which is perfect if you're looking to live off your investments, but they might limit your upside if the company grows. Growth investing, however, bets on a future payoff. Eventually, maybe even turning into dividends if you sell some stock or pivot your strategy.
Right. I guess it really boils down to what your financial priorities are.
Absolutely. Your decision hinges on whether you need cash flow now or you're more focused on capital gains down the line. It's all about aligning that with your risk tolerance and overall financial plan.
Yeah, that makes a lot of sense. And investing education plays a big role here too, right?
Exactly. Platforms like Investling are launching courses to help beginners navigate these choices. They empower you with the financial literacy you need to understand trade-offs between dividends and growth investments.
Yep, smart move. So it's not just about throwing money at the market, but actually being informed about what you're getting into.
Right on. Education is key. Without it, you might find yourself making choices that don't align with your personal goals. Whether you're starting small or, dreaming big, being informed means you can build the future you
Yes,
want.
indeed. It's interesting how, even within investing, there are these distinct paths that offer different benefits and challenges.
Yeah, it's like choosing between a slow-cooked meal that's consistent versus a spicy, unpredictable dish that might wow you once in a while but sometimes leaves you cold.
Haha, exactly. That's a great analogy. Steady versus spectacular.
And another point is that with growth investments, while the rate of return might initially seem impressive, you have to factor in that these gains are subject to reinvestment risks and might not always mature as planned.
Right? No investment is truly without risk. So then, how does one decide which route to take?
It really depends on your financial goals, your timeline, and frankly, your risk appetite. If durability and steady income are the goal, dividends are the way to go. But if you're aiming for aggressive growth and can withstand some market turbulence, then a growth investing strategy might have your name on
Yeah,
it.
really put it that way. And I'd imagine that many investors might also consider a hybrid approach, starting with growth investments before gradually moving into dividend stocks as they build their portfolio.
Exactly. A balanced approach can be very effective. You start where you are, learn as you go, and then diversify your strategy to include both paths, thereby lowering overall risk while ensuring you have a shot at both immediate income
Right?
and
It's
long-term
like
wealth.
having your cake and eating it too. It's really encouraging to see such strategies demystified and laid out in a way that makes sense for everyday investors.
Absolutely. And remember, this isn't financial advice. It's all about financial education so you can make informed decisions.
Yeah, that's crucial. Exactly. Being informed is the first step toward actual financial freedom.
So whether you're tempted by the reliable cash flow of dividends or the explosive potential of growth stocks, there's a path out there for you. One that aligns with your personal goals and comfort with risk.
I totally agree. And that, in a nutshell, is how you unlock financial freedom through smart investment choices.
Right, a blend of knowledge, strategy, and a bit of courage goes a long way. Thanks for chatting about this intricate balance between passive income and growth investing. It's been really enlightening.
Absolutely. Thanks for the insights. It's been a fantastic discussion that definitely makes you think about your own strategy.